BlackRock and Larry Fink know this, and that's why they're already taking action. They're playing for time, and 95% of people will end up staying poor because one thing is certain, the next cycle will be even tougher if we even get another one. And this was predicted to BlackRock by their own artificial intelligence, Aladdin, the technology platform for risk management that helps BlackRock not only monitor and optimize investments, but also provides BlackRock with insights into risk, returns, and strategies. Aladdin has even indicated that BlackRock should invest in Bitcoin or in blockchain technology. For example, in the first quarter of 2021, BlackRock began trading Bitcoin futures, marking their first step into the crypto market. In addition, BlackRock is actively seeking a blockchain strategy for Aladdin, as evidenced by a job posting from June 2021, in which they were looking for a director to evaluate various blockchain protocols, both public and private chains, which also includes Bitcoin and Ethereum. This suggests that Aladdin has potentially been used as a tool to analyze crypto markets, including Bitcoin, more closely for BlackRock. But where BlackRock and Larry Fink have acted, most people don't understand that buying Bitcoin isn't difficult, but actually holding onto it is a real challenge because, among other things, we see pullbacks of up to 80%, and it's also about understanding that and getting through it. It's not just about money, but also about needing a lot of mental effort and patience. These are things that most people simply don't have, things that most people lack. BlackRock knows this, and that's why they act accordingly. Bitcoin is basically like a filter that separates the patient from the impulsive, the disciplined from the weak, and the smart from those who just don't get it. And the numbers make this very clear. If you have a high IQ, you are more patient, save more, and become wealthier. And according to analyses, every IQ point brings you about $234 to $616 more income per year. And every increase of 10 points results in 2 to 4% more savings. And over time, this leads to a huge difference in wealth. And Bitcoin tests you in 3 important areas. First, your understanding of things like the 21 million limit or the halvings, the Bitcoin halvings. Then your ability to handle major losses. And finally, whether you can securely self-custody your Bitcoin. And many people already fail at one of these points before they even really get started. And surveys even show that only 5% of adults in the US feel truly confident dealing with crypto. That means 95% are simply not ready for it or not capable of handling it. Meanwhile, the big players, like BlackRock for example, are quietly continuing to accumulate Bitcoin. The top 97 wallets hold about 3 million Bitcoin, US ETFs nearly 1 million Bitcoin, companies like MicroStrategy, Tesla or Metaplanet around 1.1 million Bitcoin, and governments about 500,000 Bitcoin. Altogether, that amounts to almost 26% of all Bitcoin being firmly in the hands of states and the wealthy. Bitcoin does not redistribute wealth, but rather sorts it by intelligence and patience. And with every crash, the impatient and the less clever lose their coins, their Bitcoin, to the most disciplined people, that is, governments, companies, ETFs, and smart whales. It's like the Pareto principle on overdrive. Every bear market makes the concentration much, much worse, and every capitulation gives those who understand it even more of the 21 million coins or Satoshis. It's getting more and more serious. People with low IQ and little patience not only lose their Bitcoin, but later have to rent or buy it from those who bought earlier, paying fees, premiums, spreads, and markups. Bitcoin thus becomes a machine that siphons off wealth. And if your IQ is below a certain level, it's hard to truly understand Bitcoin, and complications will cost you a lot of money. Unless education becomes more accessible, usage becomes totally simple, and culture teaches more discipline, most people will have to pay rent for Bitcoin for decades. Bitcoin is like a super precise filter. It rewards you if you can think clearly, are emotionally strong, plan for the long term, and have patience. But if you don't understand much, can't handle volatility, or want everything immediately, in other words, if you can't control your impulse to delay gratification, you'll be punished. By the year 2040, most of the 21 million Bitcoins will be locked away in large funds, state treasuries, corporate assets, and family fortunes, and the other 99.9% will only be customers who have to pay to get access to Bitcoin. And if you understand what I've just told you, you should definitely look into Austrian economics. Learn about Bitcoin for yourself, which I recommend. For that, click the link in the description below the video. Plan for the future. Being able to withstand volatility is extremely important, and you also need to be ready before the next big wave, which is coming soon. And one thing is certain, the next cycle will be even tougher. And a few years ago, I started talking about the scarcity of Bitcoin. There are only 21 million coins, and not everyone will get a whole Bitcoin, as I just explained. And then came the FTX crash, and suddenly everyone was talking about a supply shortage. And then it turned out that 90% of all Bitcoins are held in large wallets, meaning by companies, institutions, or maybe even governments that are just buying non-stop. The big players, like BlackRock for example, have quietly been hoarding Bitcoin since 2014, especially during bear markets when small investors were panic selling. They did it smartly, buying slowly, not all at once. And now 95% of Bitcoins are locked away, while 95% of the world's wealth hasn't even entered Bitcoin yet. Crazy, right? And if everyone wants to join in, things will get really tight because there simply isn't enough available. Companies like MicroStrategy are already grabbing massive amounts of coins, and every Bitcoin that's sold is immediately bought up again. There's hardly anything left lying around on exchanges. Then there are the Bitcoin halvings. 2028 and 2032 are going to be really exciting. Then there will only be Satoshis left, no whole Bitcoins anymore, and the scarcity will drive the price even higher. And then there are the ETF stories. The headlines scream about outflows, but in reality, only a tiny fraction is being sold. It's a fake out to deceive the market. Institutions are still continuing to buy Bitcoin. By the way, Bitcoin has an inflation rate of only 0.84%, much better than the euro, the dollar, or gold. And Matt Hugan from Bitwise says, we are at the beginning of a multi-year bull market. Countries and companies are getting involved, and when the price reaches millions, you won't want to just watch from the sidelines. So think about it. Do you still want to get a piece before the big players snatch everything up? Bitcoin has been above $100,000 for weeks, and you constantly read in the news that some major publicly traded company like MicroStrategy, Capital 21, Nakamoto, Trump Media Group, or GameStop is investing billions in Bitcoin. That sounds great, doesn't it? More buyers, higher prices. Maybe it will even go up to 500,000 or more. A new monetary era is beginning. But be careful, much of this buying frenzy is fueled by debt and also by leverage that is borrowed money. And that can become really dangerous later on. There are two things currently driving Bitcoin up. First, regular money is flowing in through Bitcoin ETFs. Second, companies are buying Bitcoin for their balance sheets, and that's where things get complicated. To do this, they often take out loans, issue new shares, or use other financial tricks to get their hands on Bitcoin. And leverage means when things go well, profits double, but if it crashes, the losses are brutal. And that's exactly where the risk lies. Now imagine if Bitcoin suddenly drops by 50, 60, 70, or even 80%, as we've seen happen many times in the past. The companies that have now taken on debt might then have to sell to cover their loans, or they go bankrupt. And if many sell at the same time, the market crashes even further. That's the toxic leverage that could destroy everything at the end of the cycle. We're not there yet, but when the music stops, you don't want to be left without a chair. So keep your eyes open. This could get really dangerous later on. There are two major catalysts: the inflows into Bitcoin ETFs and the purchase of Bitcoin by publicly listed companies. So let's first talk about the Bitcoin ETFs again. These allow investors to buy Bitcoin through traditional exchanges without having to invest directly in the cryptocurrency. And the inflows show how much demand there is. And so far, the ETFs have accumulated about 1.3 million Bitcoin. This is a strong driver for the price because these are direct purchases on the market without major risks. The ETFs simply buy and sell Bitcoin depending on demand. Completely normal, as always. And now to the companies. As I already mentioned, they buy Bitcoin in two ways: by selling new shares on the market or through convertible bonds. In one case, companies like MicroStrategy issue new shares and sell them to raise money. This dilutes the shares, but if the price goes up, shareholders are often happy anyway. For example, MicroStrategy has increased its number of shares from 9.34 million to almost 260 million shares in just a few years, and that's insane. And the other method is convertible bonds. These are debts with interest that investors give to companies. At the end of the term, they can either get their money back or convert the bonds into shares. And the interest rates are often low, for example, between 0 and 2.25%, and many are hoping for rising stock prices. But there are risks here, especially with the bonds, because if they mature, let's say, in 2028 in Bitcoin, or the stock prices aren't as high as expected, investors could demand their money back. And companies like MicroStrategy would then have to sell Bitcoin, which could push the price down, especially if they suddenly sell a large amount of Bitcoin at once. Just imagine, Bitcoin is supposed to be at $500,000 per Bitcoin, but it has only risen to $200,000 per Bitcoin and stays there. The company sells, the market panics, and prices drop even further. A chain reaction is looming. And at the moment, everything is going great. Companies are buying, the price is rising, or is over $100,000 per Bitcoin. Everyone is happy, but we need to be cautious. If the debts come due and the prices disappoint, things could go downhill quickly. The risks are still there, even when things look good right now. But one thing is also a fact: BlackRock will keep buying anyway. We have seen that in the past, regardless of whether individual investors, that is, use their panicking or what the market looks like. And of course, BlackRock and other large companies benefit from that as well. Remember, the smart ones buy Bitcoin, hold Bitcoin, and remain emotionally stable. So if you want to build financial independence now through crypto and Bitcoin, click the link in the description below the video. Watch the video, it's free. What's important is that you take action, because BlackRock is constantly taking action as well, and they've been influenced by Aladdin, or rather, Aladdin has very likely told them to invest in Bitcoin and other cryptocurrencies.